Hello everyone, welcome to the PathForward podcast. Before the show starts, I would like to share a few words. When I first started to research for this podcast project, I have talked to many young people. And many young people felt they're very unsure about their financial future. Because of that, I have decided to dedicate the next 4 episodes to discuss different aspects of money and finance. And since money can be a sensitive and complex topic, I want to share a quick disclaimer. The views expressed in this episode are for educational and discussion purposes only and should not be taken as financial advice. Everyone's situation is different, so listeners should always do their own research and consult a qualified professional before making any major financial decisions. Thanks again for listening and being part of this community. Which is exactly what we're going to talk about today. So I just want to talk about 3 tax reality in Canada for this episode. Filing taxes as an employee and also taxes for self-employed person. And lastly, we're talking about incorporation.
Like some people like sending red flags to Revenue Canada.
When I was in university, I worked in TNT, which is an Asian supermarket. So whenever I receive paycheck, the amount appeared there never be what I expected. It's always a lot less.
And to protect yourself,
if
any problem happened as a self-employed, they will come after you, after your bank, after your assets. Okay?
Yeah.
But under the corporation, you will be protected.
Yeah.
You know what I mean? Yeah. It's not about you anymore, it's about the corporation.
That's why it's important to file for your taxes, basically.
Of course.
Hello everyone, welcome to PathForward podcast. Today we're very excited to have Peter Ramsis with us. He is a certified corporate accountant. Welcome to our show, Peter.
Thank you, Shaki.
Thank you. Yeah, so when I was thinking to do this series talking about money, I talked to different professionals and I'm just thinking, why don't I talk to my own accountant? Which is kind of like,
that's true.
I don't know why I didn't think of that, which is really weird. But anyway, so that's why I'm like, I make sure when you come to do some accounting stuff that we have to talk about, I make sure I invite you like last year sometime.
Are you paying for that or not?
Sorry?
Are you paying for our time or not?
Well, hopefully you're not like, going to time me too much. Yeah. But anyway, so you were originally from Egypt.
Yes.
Let's just talk a little bit about yourself first. Before you come to Canada and practicing accounting in here, what were your position before and where were you?
I lived in Cairo, Egypt, all my life, and in the first year of the university, I started working in a foreign company in Egypt as a junior accountant. So I start with them, and during my study, I was working at the same time. After I graduated from the accounting bachelor degree, from Helwan University, I was staying with them for 7 years as an accountant. I grow with them for 7 years, and then I moved to another company. It was a Canadian company opened in Egypt. It was like a immigration company coming to help people from Cairo to immigrate to Canada. So
that's why you're here, part of it. Okay.
So I worked with them as a financial accountant and manager for 2 years. And then I relocated to Dubai, United Arab Emirates. And I worked with CNN, the cable news network in Canada. In Dubai, as a financial director.
Oh, wow.
And at this point, they gave me a training on the Canadian and American system of accounting.
Really?
Yeah. So
that's interesting. Why?
It was because the accounting there, it's not it's American and Canadian, not from Dubai. We don't apply for any. Dubai is tax-free country.
Yeah.
You know what I mean? So the American people who was having a business in Dubai, they applying for taxes all over Canada or America. So they have to give me some training.
For both.
For both.
Oh wow,
And this has helped me a lot to understand the Canadian and American system of taxes.
Yeah, like North American system in general.
Yes.
Okay, which is exactly what we're going to talk about today. So I just want to talk about 3 tax reality in Canada for this episode. And I learned a lot actually when I was researching for this episode, and I think I will learn even more from you as I was asking this question. So I want to separate this this episode to 3 different parts. The first part is talking about filing taxes as an employee, and also taxes for self-employed person, and lastly we're talking about incorporation. So let's start with employee first. Now, when I was in university, I work in TNT, which is an Asian supermarket. You know that definitely. Well, now actually Loblaw own them, which is just superstore. So whenever I receive paycheck, the amount appeared there never be what I expected. It's always a lot less. And mind you, that was like, I think at that time was like $8.75 as minimum wages, right? That was a long time ago. So what is happening? Actually, before an employee ever see their income go to their account, what's happening to their income?
The payroll department, like collecting hours for the employees. There is hourly employees, there is salary, there is commission, there is bonuses. So they collecting the hours for the employee and see if he has an overtime, if he taking a vacation pay or whatever. So they calculate it, and then this is the first thing. This is called gross pay.
Okay.
Before taxes.
Okay.
Okay. So if the employee work at 40, the regular hours, 40 hours per week, so it's bi-weekly, it's 80 hours times his salary rate, $20, $25, whatever. So this is called gross income.
Okay.
And they put any bonuses, any commission, any whatever else, and calculate it, and this is gross income.
Okay.
The next step is withholding taxes at source. So on behalf of you, as I am a TNT employer, I have to deduct taxes from your paycheck. Okay, three basic deductions: the income tax, the taxes, the CPP, and the EI.
Okay. Okay,
and if you are a union employee, we take the union portion. Of course. If we, on behalf of you.
Okay.
Okay, and we take this money and submit it to CRA. Okay.
Okay.
To the
to the CRA.
Yeah.
Now let's talk about tax is being withheld first at source, basically. So like what you said, like before they pay you, the employer pay you, they will withhold taxes at source. So why does the CRA do that? Which means they just take a part of your paycheck and pay certain tax already, whatever tax that was.
Right. Because they don't want to accumulate taxes on the employee, it has to be monthly. It's like installment. Like you have to pay your portion of taxes to CRA monthly. So the employer took this amount and submitted right away to CRA.
Right away?
Right away. They're giving us, if we are paying for January 26, we have 15 days to submit the deduction. Yeah. So before February 15, the employer has to submit the money.
Okay.
So otherwise, he will have interest on the money and sometimes giving penalty for late filing.
Wow. So it's like filing every month for them, basically.
Every month for them.
Every month for them.
Yeah.
Then that comes to tax refund, right? So a lot of people think like, tax refund is like the government give you money. But actually that is not quite true. It's actually you overpaid the government, the CRA to be specific. So in what situation is a refund actually reasonable, and why is there a refund? Can you explain a little bit more?
Okay. Sometimes the calculation is not accurate 100% by the employer.
Okay.
Maybe you have a credit with CRA. Maybe you are married, you have a personal amount credit deducted from your taxes. Maybe you are working in another job, part-time job, and you have another T4. The other employer submitted to CRA.
Okay.
So by the end of the taxation year, we are applying for T1 for the individual income tax. And CRA is calculating how many taxes you should to pay, and they see, oh, you overpaid here, so we give you a refund.
Okay.
Okay. The refund, it depends on how many hours you work, how many employers you have, and sometimes if you have a children, you have a credit. If you submit some paper like daycare expenses, medical expenses, this is give you some refund as well. If you donate to any non-profit organization in Canada, they give you some of the amount as a deductible, like refund to your taxes.
Okay.
So yeah, if you are supporting Cancer Society, or if you are supporting any Christian churches or whatever, this donation will bring you some refund back.
Okay.
Yeah.
So what would be considered, I mean, I heard like wild numbers. Sometimes I have even heard like someone get refund for $10,000, which is, I was like shocked.
Yeah.
Well, so what would be a reasonable amount, to get a refund, you would think?
Okay. There is another element helping the refund as well.
Okay.
If you as an employee applied for RRSP, okay, retirement plan,
Yeah.
So and paying like $10,000 per year, there is a room every year. CRA giving you a hint about it. You have a room to contribute $20,000.
Yeah.
For example, for both of you.
Okay.
As a couple. So if you contribute like a $10,000, this will help a lot to give you a refund, a big refund of your income in this year. So
that would take away from your income, basically.
Yes.
Yeah.
Yes.
Wow.
It will
to lower your taxable income.
Taxable income.
Okay.
Taxable income. Yeah.
But eventually, you still have to pay tax though for RRSP after you retire. When you sell your portfolio, when you sell whatever it is, you have to pay the tax.
You have to pay the tax, but most of the people are using the RRSP like to buy a home.
Okay.
Okay. First time home buyer, you can use your RRSP amount and it's tax free.
Oh.
Yeah.
Okay.
It's tax free, so you can use it and then you can repay it like installment every year.
Okay.
As well.
Oh, okay, okay. But otherwise, if you really realize this, you begin to sell your investment basically.
Yes.
So then that will be capital gain tax on that.
Yes.
Okay.
Yes.
If you're doing it in retirement.
Yeah.
Okay.
Yeah, that's true.
Yes. So then what is the reason for us to file for taxes, in a sense? What are we trying to do when we file for taxes, when we fill in our T4? Like they will send you T4 slip and T5 or for different kind of slip for.
Yeah. The law in Canada that each individual has to file his taxes. Why? Because there is lots of benefits, like dental benefits, like MSP, the medical system. The Medcare, they are financing the medicine, Care Farm. So they can calculate what you are entitled unless they have your T1. They have your taxes and they calculate it. So there is people under $40,000. Those can claim dental benefits, can claim more medicine for free, stuff like that. So it's for our benefit.
Okay.
Of course, the government needs the taxes to build hospitals, to give all these wonderful services.
Yeah.
But it's for our benefits as well.
Okay.
if you have a children, Canada giving you like a monthly support for the children, child benefits. So if you don't file your taxes, you will not receive the child benefits.
Okay.
You know what I
So
mean?
like the government would not know what type of benefit you qualify, basically.
Yeah.
Okay.
So they need to know each year what your income is, what your tax bracket is, so they can give you all the credit that you deserve.
Okay. So let's move forward a little bit beyond income tax that we all have to pay, and we will talk a little bit more going forward. But let's talk about another two deduction. It will show up on your paycheck first.
Yes.
One is CPP.
Yes.
And then one is EI.
Yeah.
So CPP stands for Canadian Pension
Pension
Plan.
Plan.
But
Yes.
people should not rely on CPP alone for retirement.
No.
Why is that?
Because it's a very limited amount.
Okay.
Like you need to be like working from long time ago to count some good amount of CPP.
Oh.
But most of us like coming to Canada as a immigrant or refugees or whatever, starting working by the age of 40 or 45.
Yeah.
So the amount of CPP will not be enough. If you worked full time till 65, it will be not enough for you to support your retirement plan.
Okay.
So you have to have another plan.
To supplement it, basically.
To supplement.
Okay.
Yeah. To have an RRSP, to have there is a lot of investment opportunity. As well. Yeah.
So in your experience though, in average, how much a person usually get in your experience?
In our age?
Yeah. Well, I mean, like, of course, 65. I don't think you're 65.
It depends on the contribution because
Okay.
many people not working full time.
Ah.
Or some people are self-employed. Or
Okay.
some people having a corporation. So it depends on how many hours you work as an employee, receiving a pay stub each month and having a T4 every year.
Okay, so it's really hard to say wide range.
It's wild range.
Okay.
Wild range. But anyway, it's not enough.
I don't know. I heard that it is pretty much capped at 3,000 for a month.
Yes, for the year, yeah. Sorry?
For a month or something.
For a month, yes.
Yeah, $3,000 for a
Yes,
month, pretty
to
much.
contribute.
Oh, to contribute.
To contribute.
Okay.
Yeah.
So it wouldn't. Then that's why it wouldn't be so much, right? Okay. Now then, also there's EI, which is employment insurance.
Yes.
But they also suggest you don't look at EI as a personal emergency saving fund. You should still have your own emergency saving fund. Why is that also?
Because the EI is supporting just some cases. Like if someone laid off. So they will give him, if he applied to EI, he will give him like 55% from his last paycheck.
Oh, 55%.
55% until he find another job.
Okay.
Okay.
And not all like situation they will cover.
Not all. Not all. Yeah.
Okay.
If you quit, you don't have you are not eligible for EI if you quit.
Oh, okay.
You know, the EI is covering the ladies that they like having pregnancy and they need a vacation to to have the baby. So they cover the absence of this lady from work until they called it maternity leave.
Okay.
So until she comes back after 1 year and go. So EI is very limited for like disability, for something bad happened to the employee and he can't go back to work. But it's not general insurance.
Yeah, so it's not.
Yeah.
Once again, might not be quite enough. So it's like a little bit more than half of your last paycheck. Too.
Yes.
And they're talking about gross income or net income, do you know?
And gross.
Gross, okay. Well, that's a little bit comforting.
Fair enough.
Because like, I mean like, consider a lot of time, probably you would spend maybe 80% of your income to just run a household, which is already very fortunate, if not 100% and above.
Yes, that's
right.
true. That's true.
So Canada use a progressive tax system. So what does the progressive mean? I think U.S. is the same thing too.
Yes. Progressive tax system is like not dealing with all the income, like we will charge, let's say, 20% of your income. No. It's fair system, by the way. Okay. If you are under 40,000, they will charge 15% as a tax. If you like more than 40,000 or 30,000, they will start getting more taxes. And if you are receiving, like, let's say 100,000, okay, they will tax you for the first 30,000 15%, and after 30,000 they will charge 20% and 20. Like it's not
a flat rate.
A flat rate.
This episode is brought to you by JW Music Studio. We offer piano and guitar lesson in both group and private setting. Group lesson is a great way to ignite a student's musical interest. It offers engaging activities that will reinforce specific skill sets. Ensemble playing will strengthen their rhythmic feeling and listening abilities. Most of all, they will experience the joy of making music with others. Contact us to find out our available schedule. Okay.
Yeah.
So that's what they're talking about, the marginal tax rate, right?
Yeah.
You know, this is what they meant by that.
Yeah.
Like, so basically, like they would charge you the first 30,000 is
right.
Whatever.
I can give you an example. Like if you earn $75,000, the first 50 will be taxed at 15%. Okay. Next 25 will be taxed at 20%. Okay. So overall effective tax rate is between 15 and 20, not 20, and on all 75,000. You know what I mean? They will not charge 20% from the 75. It would be crazy.
But I think it still have one more level, right? Isn't it? So like the layer is 40,000. Then what's the next bracket? Then you would go to the higher.
The higher is 75.
Okay.
And then more than 100.
Oh, and then more than and I think that's it, right?
Yeah, that's it.
Oh, that's fortunately.
Yeah.
Okay. So that was a very good example.
Yes.
We have talked a little bit about tax deduction for employee.
Yeah.
Can you explain a little bit further? So, what are the legitimate tax deduction that we can have for employee?
The most common deduction, as I said, it's the RRSP, the contribution registered retired saving plan. Contribution. Like example, 5,000 RRSP contribution reduce tax income by 5,000.
Okay.
So if you pay this contribution, it will be like deducting from your taxes. The union, the professional dues, this is another one. And if you have like a first home buyer, first saving account, first home saving account, this one as well. When you contribute it, if you don't have a house, you can open this account. It's kind of saving money for the first home that you are purchasing. So
that's pretty much it.
That's pretty much.
And also like donation, I think donations, charitable organization.
Yes, charitable donation, of course, it will help you a lot with deducting the taxes. All the expenses, like if you have moving expenses, this is will deduct from your taxes. If you have a daycare expenses, My wife is working and has to put the child in a daycare, so they give her deductible for that.
Okay, but not the complete amount. All of this benefit is like count by percentage, right? Most of them.
No.
No. So you don't count fully.
What do you mean by don't count fully?
So like, let's say, the daycare cost me $3,000 a month. Can I claim like $3,000 a month to take down my taxable income?
No,
No.
It's $500 per kid.
Okay.
Per year.
Oh, so it has a cap.
Yes.
Okay.
Yes.
And different deduction will count differently too.
Yes. And there is if you are a low income, they can give you subsidy for the daycare as well.
Oh, okay.
You can apply for subsidy, so they give you the kind of 70% or 80% from your expense in the daycare.
Okay.
Yeah.
That's why it's important to file for your taxes, basically.
Of course.
And I think as long as you have an income, you should file for your taxes. Doesn't matter how old you are. If you work legally,
yes,
you should file for taxes.
You should file your taxes.
Okay,
yes.
Whatever age it is.
Whatever age, and if you don't even have any income, it's important to file your taxes as well.
Oh, really?
Yeah. Sometimes people work for 2 days and stopped. Okay, so they have just. We will talk about self-employed as well. But sometimes you don't have a T4, but you make some money from anything.
Yeah.
So claim it, and apply for your taxes as well.
Oh, okay.
Yeah.
Okay. Now, so let's move on forward. Like we were talking about, let's talk about self-employed.
Sure.
So compared to employment, how does the CRA treat self-employed income differently?
Yeah. The employee has to have a T4 from the employer to submit to CRA. But self-employed, we will be under another category with CRA. He has to file the T1, the individual income tax. And on this same file, T1, they have to apply for T2025 with self-employed income. Okay?
Yeah.
He has to put his gross income from any kind of business, and he will be deducting as well his expenses. So if you are working from home, you deduct home expenses, a part of your rent. Let's say 20% of your home expenses, you can claim it on the self-employed taxes. So the self-employed doesn't eligible for EI.
Oh.
You know what I mean?
Okay.
He can't deduct EI. But he has to be responsible for CPP.
Okay.
So in the individual, if you are working in a company, we are deducting EI from you or CPP from you, and the corporation is adding on a portion of it. When you are a self-employed, you have to pay both of them.
Oh, okay.
Same portion, double. CPP double.
Oh, so CPP for you're representing that as an employer as well as an employee.
Yes.
Okay.
Yes.
So you have to pay two parts.
Yes.
Oh, wow. Okay. But so is tax still withheld? I guess it's not, because you just count gross income.
No, it's not withheld, but if you are not aware, you can accumulate taxes on yourself, and you have a problem paying it off by the end of the year.
Okay.
So it's very important to have a bookkeeper or have a professional advice how to deal with it, because some self-employed as well has to open a GST number. So they have to collect GST from customers and they have to pay it back to CRA. So by the end of the year, if they are not controlling this amount, they will be surprised that they are owing lots of money.
Oh.
You know what I mean? Yeah.
So I guess that's a con.
Yes.
Of not being tax withheld. But is there any pros? Is any advantage of no?
Of course. The self-employed income, we are not CRA not taking taxes from the gross income. Let's say you are selling something and you have a gross income of 30,000. Okay, they will not charge you for 30,000, but After the deduction, you deduct your cell phone, your car, your gas, your insurance, your part of the home expenses. After that, the net income will be like 15,000. Okay. So they will charge you taxes on the 15,000, not the 30,000. This is a big benefit of being a self-employed.
Okay. Do self-employed individuals still fall under the progressive tax system? You still have to go through different layers.
Yes. Okay. Same applied for everyone. Like, for an individual employee or for self-employed, the progressive income system will be the same.
Okay, still apply to them.
Yes, apply for that.
And so like what you said, they don't have EI.
Yes.
And they still have to contribute to CPP.
Yes.
Based on your income.
Based on your income. And it's a big amount because he's paying double.
Yes. Yeah. And I think you pay yearly too, right?
Yes, it's yearly.
Yeah.
Once you apply for T1, you have to pay the CPP. And most of my clients was like self-employed. I advise them to transfer to corporation for that reason.
Okay.
Especially the CPP.
Okay.
Yeah.
So in general though, what qualify in a very simple way as a deduction for self-employed in general?
All your expenses, all your business expenses.
Okay.
Your cell phone, your internet, your hydro, your home expenses, your car.
Yeah.
Sometimes you are meeting with clients in restaurants and having a meal. So there is you can deduct 50% of your meals as a business expenses.
Okay.
Maybe you are traveling, so we can deduct the traveling expenses, the flight and the hotel and all these expenses related to the business.
Yes, that's the key. It's related to the business.
This is our responsibility as an accountant to make sure that the client is deducting the right amount, not just putting everything on the...
on the deduction. Maybe they wish, but no.
Yes.
But sometimes, what would be a healthy way a self-employed individual think about deduction, like a sustainable and a healthy way to think about deduction?
The key point of the deduction is what is related to business. And of course, he doesn't have many options in the deduction, that it's just whatever is related to business, you have to deduct it. Okay. So... and that's it. That's pretty much...
so you have to make sure about that.
Make sure about that.
Okay. Yeah. But do you think file for taxes become more complicated once you are self-employed?
Of course.
Oh, it is?
Of course.
Okay.
It's a little bit complicated than the individual.
Okay.
As an individual, I have a T4, just submit it to any Canadian software, tax software, and that's it. But for the self-employed, has to file its kind of income statement and balance sheet. It's kind of.
Okay.
So there is another form for that, and he has to apply, like put the gross income and then deduct all the business expenses. And has to be accurate and, so it's a little bit complicated than the individual.
Okay, so it's like an income statement, basically.
It's an income statement.
That's an income statement.
Because like he's putting the revenue against the expenses. So gross income is 30,000, and my rent is 20% of the rent per year, 20% of the hydro, of the gas, of the car, of the whatever. He has to do some calculation. And of course, if he has an accountant or bookkeeper, he will help him. But by himself, it will be a little bit complicated.
Okay. And that's the other thing. So what type of record a self-employed person should they have a bookkeeper? Do they have to have a bookkeeper?
Not necessarily. It depends on the volume of the business.
Okay.
Okay. If the business having, let's say, a bank statement, 5 paper of bank statement.
Okay.
Or 1 paper. If he has only 1 paper of statement, it's okay. He can do it by himself. If he's 5 papers and lots of transactions and lots of expenses, it's better to have a bookkeeper. So it's better. Yeah.
So what is the rule for CRA regarding to keeping the record?
CRA wants to see the record for 7 years. You have to keep the record for 7 years.
Okay.
So it's better to maybe scan your receipts once you got it. You know, some people giving me lots of receipts in a yellow envelope, and I have to calculate it by myself. And but after times, like the receipts, the carbon copy will be like
disappear.
So my advice to my clients that always like scanning everything and keep it on file for 7 years. So if Revenue Canada coming back and asking about anything, we will have it.
Oh, so they can pick any year if they want to see record. Any of these 7 years.
Any 7 years. And if you don't provide the document for them, they will like deduct this amount. They will remove it from your expenses.
Okay.
Increase your taxes.
Yes.
Yeah.
But if they are coming to ask for your record, obviously they must find some problem in like your filing first.
Yeah. Like some people like sending red flags to Revenue Canada.
Okay.
If your expenses is not reasonable, if you're having an income of $30,000 and you put expenses like $40,000, okay, it doesn't make sense that you are, how do you live by that? Like, where is your income? Where is your, so they have a sense of knowing what is misleading or what is accurate.
Okay.
So if someone is applying for GST refund, for example, and he's like refunding $2,000, where it comes from, so they can ask you, prove all this $2,000 came. Send us the receipts and the invoices to prove. It's called ITC, the GST refund,
Okay.
So, that's red flags. Sometimes Revenue Canada come to you and ask you, we need to audit you.
Okay. That's why I think once come to self-employed, I think personally speaking, I think it's much better to have an accountant.
Yes, true.
True. Because sometimes it's very gray area to think what is business related and what is not.
The best scenario is that everyone having an accountant.
Okay.
Or bookkeeper, at least.
Yeah.
So, to support it, because you don't know all the tax laws or the, black area or gray area. You don't know. So your accountant will help you to figure it out and to claim. Some people doesn't give me some important invoices. And I'm telling them, where is the invoices of this? Oh, we didn't know that we can claim that.
Oh, okay. Yeah, that's true.
The bookkeeper will help to reduce taxes and to be fair enough with Revenue Canada.
Okay. But then the tax code change from year to year too. Like, do you need to like kind of study it, like, to learn about it every single year to kind of keep you updated? Or maybe not year to year, but like there are major changes once.
You can subscribe with Revenue Canada website and they can send you information email every year about any changes. They are sending to us as an accountant all the information year after year. And there is lots of guides, lots of information on the website. So if you need to know, you can subscribe and they will send it to you.
Okay.
It's very easy.
It's very easy. Okay.
But for most of the people, it's very complicated and they can't understand it. So ask your bookkeeper or ask your accountant. It's better to know.
Okay.
Okay,
now then let's talk about the last part, which is incorporation.
Yes.
I think incorporation have a lot of implication beside on the tax side and also have a legal side too. So what does it actually mean to say a corporation is a separate legal person or separate entity?
The key features, I wrote it down for you here, like owns property. The corporation can buy, own, and sell assets in its own name.
Okay.
Okay. The corporation can enter contracts. So you can sign the contracts under the name of the corporation, not your personal name. You know what I mean? Can sue and be sued. You know, legal actions are directed at the corporation. When we created your corporation, we called it LTD.
Yeah.
So it's limited liability. Okay. Anything happening, it's not against your personal property. It's against the corporation. So it's safe for you as a businessman to be under the LTD corporations. Of course, the corporation pay taxes separately. You know what I mean? Corporation files its own tax return and pays corporate taxes. Shareholders pay personal tax only on dividends they received. If you are receiving dividends from the corporation, what dividends mean? Dividends means that the net income of the corporation is 100,000.
Okay.
So you decided to take 50,000 as a dividend. So we give you a T5, taking these dividends from the corporation, and we, when you file your personal taxes, you will pay taxes on this T5.
Okay, but that's as a shareholder. That's a shareholder.
Yeah.
Okay.
Yeah.
At JW's Music Studio, we offer more than just music lessons. We also nurture future leaders in music education. Our piano teacher apprenticeship program is an initiative designed for advanced piano students who are ready to take the next step from student to teacher. This program provides a structured, supportive pathway into music teaching. Participants are mentored through every stage, from interview and training to guided teaching and independent lessons, all while being compensated as they grow. Whether your teen is exploring a career in teaching or simply wants to deepen their connection to music, this program offers real-world skills in a safe, encouraging environment. Contact us today at jnwmusic@yahoo.ca.
Most of the corporation in Canada having one or two shareholders. I'm talking about the mid-size or the small businesses.
Yeah.
So for my corporation, it's me and my wife as a shareholders.
Yeah.
You know what I mean? So there is bigger size of corporation having 100 shareholders, and they sell shares as well.
Yes.
So
that would be publicly traded company.
public, yeah.
Yeah.
So, and the most important thing, that the limited liability of the corporation. Yeah.
Okay.
Shareholders' personal assets are generally protected from the corporation's debt or lawsuit.
Oh, okay.
You know what I mean?
So you can get that from a corporation too.
Of course, you can get that. You can like do service to someone, and he sue you. He wants the money back. So the court, the judge, take a decision that this corporation has to pay back to this. So the debt, it's not your responsibility. It's a corporation responsibility.
Okay, but then it's limited amount.
It's limited amount.
Limited. That's why it's a limited corporation.
Yes.
Yeah, an LTD.
Yes. So the key idea is the corporation is its own legal entity. You know what I mean?
Yeah.
Separate from its owners.
Okay.
This is very important to know.
Okay.
Yeah.
So how does that legal separation, well, perhaps you answered that already, how does it protect the owner?
Yeah.
But does it also give the owner a bit limitation, perhaps?
Of course.
Okay.
Like it's the corporation, its own legal obligation, owner must follow bylaws.
Oh.
You know what I mean? Regulation and tax rules and stuff like that.
Okay.
So responsibility for governance, like you govern the shareholder dividends, financial limitation as well. Corporate assets are legally separate. You know, some people like using the assets as they own. You know, no, it's if you have a property, if you have a car, if you have a building, this is under the corporation. It's not under your own use. So if you use it for another business, it's illegal.
Oh, okay.
You know what I mean?
Yeah. So if like, let's say the house I'm living in is owned by a corporation, I should pay rent essentially.
Yes.
Because I should not be using it for myself.
That's true.
Okay.
That's true. Yeah.
Like most likely.
Yeah.
So it has a certain limitation.
Yes.
But then when you talk about the financial obligation, particularly for dividend, is basically you enter into an agreement with this shareholder and you have to follow through. Is that what you mean?
Yes. When we create the corporation, we have a corporation agreement contract contain like 15 to 30 pages.
Yeah.
You know, there is lots of regulation to follow.
Oh.
Yeah.
So, but that's like the government like asks you to do that, you
Yes.
have to follow this thing.
Yes.
Okay.
And your accountant helping you to follow this regulation.
Okay. Okay. Wow. Yes.
Yes.
So there is a little bit more thing.
Yeah.
So then how does incorporation change how income is taxed? Well, obviously, that was it. That is two different
Yes.
taxes. Let's talk about like the incorporation as the entity first.
Sure. The corporation having a big privilege that, like for the small business, they give you like 500,000 like tax deductible deduction. You know, like it's any lower than top personal tax rates, like especially for small business, it's 500,000.
Okay.
They called it like active business deduction.
Okay.
You know what I mean? So the corporation having lots of benefits regarding your income because it's like contain lots of opportunity for deduction.
Oh, okay.
Yeah, you know, it's you corporation, you can apply for payroll, for example. In the corporation, the payroll will deduct lots of taxes, you know. If you are like a husband and wife in the corporation, they can have payroll from the corporation except the EI.
Okay.
They are exempt from EI because they are the owner, the directors. So there is lots of opportunity for deduction under the corporation, and it will be very fair for you to have a good income and good life.
Okay.
So
so it would you say is even open to more opportunity for deduction even for self-employed?
Yes.
Oh, really?
Self-employed is limited for the deduction. Yeah.
Okay.
Sometimes when we prepare the self-employed income statement and we increase the expenses, the refund stop increasing.
Oh.
You know, it's reached to higher the maximum level of deduction. You know, for the corporation we don't have a limit.
Oh.
Yeah, we don't have a limit. So whatever gross income you have, we can deduct all your expenses, and there is no limit for deduction. And after that, we will have the last amount of income, the net income. So this net income will be taxed.
Okay, for the corporation.
For the corporation.
But then is corporation also taxed the same way that it go to a progressive system?
Yes. And it's if the corporation having a GST as well.
Okay.
Like most of the corporation having a number, GST number, because they are deducting, like receiving GST from customers and have to pay GST back. And the GST itself, it's a good opportunity for the corporation. Why? Because Revenue Canada, CRA, giving you the privilege to deduct your own GST from whatever you collected from customers.
Oh.
So let's say you collected $1,000 from customers as a GST on top of your service fees.
Yeah.
Then you buy a computer, you buy office expenses, you buy lots of stuff, and you pay $1,100. Okay? Yeah. So they deduct the $1,000, 100 from your 1,000 and giving you back $100.
Oh.
You know what I mean? It's kind of refund.
Oh.
So this GST collected from customers going against your purchases
Yeah.
on GST on purchases. So, and if your GST on purchases higher than what you received from the customer, you don't need to give them the $1,000. It will go to your own benefit.
Yeah. But also that's why I think they check on that a bit more. I think
Of
that
course.
is like pretty rigorous rule and to abide
and
to.
if you are accurate in your bookkeeping, and we have all the receipts that you proving that, it's fine.
Okay.
It's fine. I know a businessman was starting the business, and his business like needs like 2-3 years to be established. So he started paying lots of GST on the purchases. So he was claiming all this GST and receiving it back. And helping him to continue.
Run business basically.
Yeah.
Wow. Okay.
If you have a proof, you can use it. If it's
It's real, basically.
It's real.
This is real. Most important thing is it's real, right?
Yes.
Now, then you still as an owner, you still has a personal tax that you have filed because it's corporation is a different entity.
Yes.
And personal, you still have to file for taxes.
Yes.
Then how does that work if you're the owner of the incorporation? What type of taxes you have to file for that?
You have to file T2, corporate income tax return.
Okay.
And this is extremely complicated. And you can't file by yourself.
Okay.
You have to have an accountant, professional accountant, because like the T2 files is like having lots of questions. You have to answer it about law, about regulations, and any owner doesn't know all these laws and regulations. So it's very complicated and has to be under a professional accountant.
Okay. But that's for the personal even?
No, this is the T2 for the corporation.
For the corporation.
For you as an individual, you have two options. If you are receiving a payroll from the corporation, it's okay. So the corporation will give you by end of February T4 from your corporation.
Okay.
So my corporation called JCC Tax and Accounting Services giving Peter Ramsis a T4 that he was an employee under the corporation. Okay, and we already pay all withholding taxes and everything. I will take the T4 and apply for the T1 individual income tax. Okay, and my accountant will, in my case it's myself, I will apply for T2 for the corporation, the corporate income tax return.
Okay, so T1 for yourself and T2 for the incorporation.
If you have a dividends from your corporation, as I mentioned before, you will receive a T5 from your corporation to you under your name, and you will apply for individual income tax for it. So if you have a T4 and T5, you can file it in the individual part.
Okay. And dividend don't count the same way as a regular income too?
No. Dividends means that the corporation having a net income, and the corporation in the minutes meeting books, the shareholder decided to take these dividends as an income, so they will provide you a T5. Okay. If you receive $20,000, the T5 taxable amount will be more than $20,000 because you receive the net. Okay. So it will be, there is some calculation. Let's, for example, for make it simple, let's say it will be $35,000.
Okay.
This will be taxable amount under your income. You know what I mean? Not the 20. The 20 is net. That you receive from the corporation. The taxes, individual taxes, will calculate this amount under another amount. The gross amount will be, let's say, 35. Okay.
So it's like more complicated. Another area. Completely different. Okay. So what happened tax-wise when money moved from the corporation to you personally?
This is a tricky one, because as a director or as a shareholder, you have the right to borrow money sometimes from the corporation, but you have to pay it back. Okay. If you take money, we can put it under a sub account called shareholder loan,
Okay.
due from shareholder. So you borrowed money for a short time and you return it back. But you are not allowed to take money from the corporation without any legal way.
Okay.
You know what I mean?
Yeah.
It's meaning like you stealing.
Yeah.
You know what I mean?
Okay.
So yeah, we can borrow money, but we have to pay it back in a short time.
Okay.
So it's allowed, but not preferable.
Oh, okay.
Yeah, not preferable. If you take money as a shareholder loan, it's okay, but you have to pay it back
Later.
as soon as possible. Yeah.
Okay.
Yeah.
But then is there any other way that you can move a money from a corporation to personal? Is it any other way beside a shareholder loan?
Dividends.
Okay, that would be the main.
Dividends.
Yeah.
And payroll.
And payroll.
Yeah.
Okay. Why does an incorporated business often need a bookkeeper in addition to an accountant?
Sometimes a bookkeeper, the accountant is doing the bookkeeping stuff, but anyways, bookkeeping, it's a must in the corporation.
Oh,
It's a must.
it's a must.
It's a must.
Okay.
Okay, because the CRA needs to see an accurate record for all the years. Okay, so when the time comes and CRA asking to audit a year, and they will ask for a specific financial statements. If you don't have a bookkeeper, you will be lost.
Oh, yeah, that's
They
true.
will not receive receipts and a bank statement, and you're telling them, okay, do the calculation by yourself. No, they need a trial balance. They need a financial statement, balance sheet. They need accounts receivable statement, accounts payable statement, assets statement, depreciation statement.
Yeah.
You know,
Yeah.
where is this money? Like how you calculate this? So it's a must to have a bookkeeper and an accountant to file your corporate taxes each year and to keep records. Keep record. Usually they are using an accounting software like Sage or QuickBooks or whatever, and they give you a backup file when you need it, or when maybe you needed to submit something, whatever. It's your right as a client to have a backup from this bookkeeper software.
Oh,
Yeah.
okay.
Yeah.
I think that would be the biggest question of them all because, like, I think corporation, it sounded like there is a lot of, I think, as more protection. I
Yes.
think that's the main thing that I see as an
That's
corporation. Of course, then you have a corporation has more right to do certain things, but mostly if you're a business person, I think it gives you a lot of protection. But what is the ideal situation to move from a self-employed to incorporated? In what way that would make sense?
Okay. When you were a self-employed, you find yourself that you are paying lots of CPP. And CPP, as we said, it's not the best option for a pension plan.
Yeah.
So this is wasting your money, basically. And your business is flourishing, your business is doing well, and you have lots of money. And whenever your income increased, the CPP will be increased.
Yeah.
So our advice always to our clients, it's not the right way to do your taxes as self-employed. You have to move to a corporation as soon as possible to save this money. You know what I mean?
Yeah.
And to protect yourself.
Yeah.
If any problem happened as a self-employed, they will come after you, after your bank, after your assets. Okay?
Yeah.
But under the corporation, you will be protected.
Yeah.
You know what I mean?
Yeah.
It's not about you anymore, it's about the corporation.
Yeah.
So if my business is doing more than $30,000 and I'm doing well, it's better to move to be incorporated.
Yeah.
Yeah.
Because like the amount of CPP contribution will be very significant.
Yes. and the refund will be nothing.
Yeah, that's true.
Yeah.
Yes. Well, yeah, because like you have contributed a lot in there
Yes,
already.
yes,
Unlike you as an employee, they
Yeah.
withheld it. You have
Yeah.
to count at the end of the year.
And one of the biggest benefit in the corporation that if you have a loss, if you have a net loss this year, it will be going towards the next year.
Oh,
Let's say if I have a loss of $50,000 this year, next year my net income is 100,000, 100K. Okay, they will bring the 50,000 from last year loss and deduct the 100K, and you will pay taxes only for 50,000.
oh, okay.
You know what I mean? It's a great benefit for the corporation.
Yeah, as a business.
Yeah.
Wow. I have learned a lot, and I know it is actually still a lot of complicated situation,
Yes.
and perhaps like different area we haven't talked into. But before we end, I'm always curious about this, is the TFSA account.
Yeah.
When you contribute to TFSA account, is it tax deductible?
It's tax deductible.
Oh.
Whatever you put on this tax-free saving account without taxes.
Yeah.
So it's like a saving
Account.
You can put some cash on it and not paying taxes on that account.
Oh.
So it's good option.
Okay.
Yeah.
But then also has a limit too. That
Yes,
one.
it has a room.
It has a
You
room.
can contribute. You will receive on your notice of assessment every year that you have a room in the tax-free saving account.
Yeah.
That amount, you have a room for RRSP.
Yeah.
That amount, and if you have a first saving home account,
Yeah.
they will tell you the room as well.
Oh, okay.
Yeah.
Wow. Thanks so much, Peter.
Very welcome.
Thank
It was my
you.
pleasure, my
Yes.
pleasure. Thank you so much, guys.